Homes are sitting longer. We're seeing more price cuts. And for the first time since 2019, buyers kind of have the upper hand in the market. Texas and Florida, inventory is up over 100% in some of those markets. But here's the thing, the housing market hasn't crashed, but it is shifting. And today we're going to break down what that means for buyers, sellers, and help you make your next smart move.
Jeb, I'm going to say something that's going to come as a shock to longtime listeners. All of this comes down to supply and demand. So what are we looking at? We're looking at an increase, a shift in supply in all markets. Even the markets that are still performing well have more supply than they did a year or two ago. So the question just becomes, in your market, not the national headlines that everyone's making such a big deal about, in your market, what does that supply-demand equation look like? And that's what we're going to talk about today. A couple episodes back, we went through Redfin makes big headlines saying there's 500,000 more sellers out there than buyers, which indicates that, the only way to clear that much inventory with that big of an imbalance is a big shift downwards in prices. Well, in their report, they were quoting that there's 1.9 million homes for sale. Well, Realtor.com does the same analysis of the same MLS data, which is what is picked up by Fred, which is the U.S. government's statistical website where you can dig in. And they're reporting 1,036,000 listings. And great. Is that good? Is that bad? Is it high? Is it low? It's the highest since 2019, and it's up 31% year over year. So today, relative to where we were a year ago, the supply-demand balance is much more, no matter where you are, more in a buyer's favor, and it's changing how you approach the market.
Yeah, inventory's at 5-year highs, but here's the thing. I happened to talk to a friend yesterday, and you and I have this conversation, Josh, and it's the market has shifted, right? I've got 4 listings at the moment. 2 of them have offers under contract, 2 don't. Some weekends we get showings, some weeks we get showings, some weekends we're not having any. It's weird. It's really hard to pinpoint because we go through these times where it's busy and then times where it's not, and I'm like, it's hard to feel the market out. So I was talking to a buddy of mine yesterday who's in Charlotte, and he's in the home building arena, and we were just kind of working it through in conversation. And I think for me, what I'm noticing, Josh, to be the biggest difference outside of supply is the shift in the mindset of the seller. Right? Because what we talk about this all the time, sellers have buyers, both sellers, buyers, everybody has a short-term memory. So they only remember the last 3 to 4 years. And in fact, a lot of the agents that are doing business right now weren't even doing business prior to the pandemic. So when you start to get more normal looking market, and I say normal in the idea that, hey, listen, things don't sell in a weekend. Homes do sit on the market for a while. It might take weeks, months in some cases to sell a home. Everybody panics. Everybody says, oh my God, what is going on? And the reality is we're getting, back to this norm, and people don't have the context. They don't have the experts to tell them, hey, listen, this is what's taking place. There's no reason to panic. And, we need to start having probably some difficult conversations with regards to price and expectations moving forward.
Let's look at it. A little bit of data. We'll try to not go too deep, but 75 metros around the United States have more inventory than they did prior to the pandemic. So obviously a good thing. We're coming off massive undersupply, and now we're kind of back to where we were pre-COVID, and no one thought we had a lack of inventory. It was a balance. The most impacted states, Texas has 9 metros over that level. Killeen, Texas, 122%. Austin plus 70% more than they had in 2019. Florida has 10 metros. And we've talked about Texas and Florida ad nauseum. They're not the only ones. Colorado has 4 metros. Colorado Springs, 91% more than 2019. Denver, 65% more. So there's more homes, there's more options. You have more leverage as a buyer, no matter where you are. But that depends a lot. Someone that we follow is in the New Jersey area, and they're talking about it's still multiple offers in their part of North New Jersey. South New Jersey may be very different. Your market may be very different. We're going to talk about a few of those markets. So what I want everyone to walk away with that is in the market wanting to buy is to know that, yes, the market has changed. Yes, you have more power than you did, but it's going to vary by market, and it's going to mean different things depending on where you're at.
Yeah, and let's take that into talking about prices. You and I, again, having a conversation off air yesterday, just going back and forth. And one thing that I am noticing is that because home buyers are paying so much more for a property today than they were, say, 3 years ago, 4 years ago, in the middle of the pandemic with super low rates before home prices shot up. And buyers now expect more. They expect more in the home. They expect more in the location. They want more value for the dollar that they're paying, right? During the pandemic, I had clients willing to write an offer on things that didn't check all the boxes. In fact, I had clients write offers, multiple houses, time and time again, 20 in a row sometimes. And
you had a buyer want to write an offer on a home that sided to railroad tracks.
Yes. And it was like the foundation was like collapsing in this thing. It was awful. But what I'm seeing now is buyers walk through a property and they're like, yeah, I like it. But you know what? I'm just gonna wait and check some more inventory. I want to see if anything else pops up. Or I'm not in a rush. I'm about to go on vacation for the next couple of weeks. If the home's still there when I get back, then let's talk about it. So it's a change. It's a change in mindset and how buyers are approaching the market.
Prices, rates, affordability have a lot to do with that, but they're not the only thing. If supply wasn't also increasing, buyers will be getting a little bit pickier, but now that they're sensing that they have the ability to get a lot pickier, then it makes sense that they would. If you only have one house to choose from and there's 3 people that want it, you're going to be like, well, if I want a house, that's what I got to do. If there's you, the one buyer, and there's 3 houses to pick from, which one are you going to go to? You're going to go to the one that has the best school district or is the most upgraded or has the best optimal floor plan. So buyers by nature are taking advantage of this, those who can buy with reduced affordability. Because what I always like to point out, we show the demographics and we've shown the charts before that we are still in a peak wave of demographics of people entering their prime home buying age. And as home buying gets pushed out more towards 38 from that 33 age, we're going to be there a little longer than expected. But that doesn't mean that is what we like to call willing demand. That's people that are entering the age and time in their life when they are willing to buy, want to buy. Doesn't mean they're able to buy, doesn't mean they will pull the trigger. So where we're getting is affordability has led to a pullback of able demand, either those who are actually able to qualify or those who are willing to pull the trigger and do it. So we have this supply demand imbalance. We talk about we're back to 2019 levels. And if you take it in a vacuum, you would say, so what? 2019 was a good year. We had like 4 or 5% appreciation. It went up a little bit, but not enough to boil the frog. Everyone was comfortable. Sellers were getting a higher price. Buyers were still getting an affordable home. The problem is where affordability is right now. There are less people able to buy. There are still as many people. The demand is still there. People are entering prime home buying age. There's no lack of people who want to buy homes. The people who are willing and able to pull the trigger on the loan and do that has decreased. So even though we're only back to 2019, where this amount of inventory wasn't an issue for the housing market before, with affordability where it is, if something doesn't improve in terms of interest rates getting better, wages going up, home prices dipping a little bit, it's going to continue along these lines of supply increasing and the scales moving a little bit more towards buyers.
Yeah, I mean, you said that national home prices up 47.1% since January 2020. That's according to Case-Shiller. Typical monthly payments have more than doubled, up 116%. And like you mentioned, worst affordability in 30 years. Now, the one thing I'll say about inventory increasing and back to 2019 level, Josh, is that 30% of the overall inventory is located in 2 states. Okay. Take out those 2 states and you're not back to 2019 levels in most markets out there, right? There are metros, again, that have them. The difference is because of the short memory, the short mindset that we constantly talk about and that I mentioned earlier, it feels different. It feels overwhelming because here in Huntington Beach, I mean, there was a time where we had like 80 properties on the market. I mean, and that's condos, townhomes, single family homes. Some of those are senior communities. Some are on lease land. Some of them are $5 million. So once you factor out all of that stuff, you have next to nothing. Well, now as of today, you're sitting at like 280 homes. Wow. That's 300% more, but still really low relative to where we were prior to a 2019 market. Now, that doesn't mean buyers don't have leverage. That just means it varies. It varies by price point. It varies by location. It varies by a lot of different factors. And there are homes still selling in the first weekend. But I don't want you as a seller, if you're listening, or as a buyer trying to make offers, think that that's what happens on every single house, because that's not the reality.
Well, think about it. I might get in trouble for making this analogy, but when we go back, if there's one buyer and there's three homes, it doesn't mean that none of those homes are going to sell. It means that buyer is going to have their choice. Do they want to go to the worst house and negotiate the lowest price? Do they want to go to the best house and get a good price? It's no different than when you're out in the dating game. What are your options? If a 50-year-old woman is available and she's never been married, doesn't have kids, has a great job, and is super attractive, everyone is going to want to bid on that property. And there are homes that are similar to that.
Well,
You know,
I was wondering where you were going with the analogy thing, because you threw in a home, and now I get why you might get in trouble. Yes.
But you know what I'm saying? There are things that are always attractive. So when you're looking at that home, that perfect HGTV home in the right school district, in the right location, maybe it's not going to go 10, 15% over asking price like it might have or would have in the past, but it is still going to sell at a reasonable price. And then you have other homes, and that's where you're probably seeing that some of these sellers have to get realistic. If my home is not that HGTV perfect home in the perfect school district, in the great location, in the right zip code, their only power to attract sellers is to cut price, is to be more attractive in terms of affordability than the one is ideal. What I can say is I still have a lot of clients who are going for that perfect HGTV home, but there are more that are going, yeah, I want that, but we'll get that over time. I need to get in at a price that makes sense with concessions. So at where I kind of want you to go with that, if you're listening, is think about that in terms of what you're looking for. The more you are willing to accept in terms of lesser elements in a home, the greater negotiating power you will have in terms of price, concessions, timing, anything that you find valuable in that. Because what I'm seeing is my clients that are going after the perfect homes, not that they're overbidding or getting in bidding wars, although we do have clients in many parts of the country. We've talked about Freddie down in San Diego. They've missed out on 4 homes. They're looking for turnkey homes, and those turnkey homes are selling quickly. If he wanted to go get a home this weekend, he absolutely could, but he and his fiance want something very specific. So know yourself, know your market, and how that comes together.
And this isn't an environment where I think you have to sacrifice as much, right? 2021, 2022, things were selling really quickly. There were some sacrifices to be made in some of those offers because things were moving so rapidly. If you wanted to get in, you probably had to do some things you weren't necessarily wanting or willing to jump into as a first-time home buyer. Now, I think there's less of that. Doesn't mean you get to check all of the boxes. It just means, hey, listen, figure out your non-negotiables, whatever those are, stick to those. And then on some of the other things, maybe you're a little less strict on yourself so that, you can find the right house. And there's a lot of negotiation out there. There's a lot of ability to negotiate compensation. There's a lot of ability to negotiate repairs. I'm seeing it on my listings. I'm seeing it working with buyers. People are more willing now to work with others than they have been over the last couple of years. And part of it is the market. Part of it is the unknown of what's to come. And I think all of those things set up well for somebody that's looking to buy their first home. So Josh, we've got building permits came out today. Came in less than expected. We've got buyer demand is pretty stable for the most part across the United States.
Stable at low levels. We hit a lower level once affordability went down, and it's kind of stayed bouncing at this level for about a year and a half now.
The biggest difference is homes that are coming on the market aren't selling as quickly, right? And so those days on the market are adding up, which is allowing inventory to increase over time. And so that's why it's not like you have this mass flood of inventory coming to the market. It's just there's not as much demand as there has been over the last couple of years to take those properties coming on the market off the market. And so it's created this, just imbalance.
Let's talk about that. What we have less of is sellers who are like, I would like to move. I would like a nicer home, bigger home, different school district. It's more sellers who have a true strong motivation. I need to get my kid into this school. I got divorced. I have this job opportunity. We have a client, a friend of yours that you referred to me. I did the loan up in Sacramento. They just had to sell their home in Sacramento at a very small loss. They bought it about 18 months ago, but he got such a great job offer that they got a great deal on a new construction home in Colorado with one of these builder deals. And he's making 50% more than he was before. So there's good opportunity. There's bad opportunity. But when you talk, hold that thought, hold that question. I'm going to tell you a little story of something I read this weekend. It was an article on the Florida market, and it was a seller who was panicked. I keep seeing this in these headlines. Sellers are panicking. I haven't run across a panicked seller yet that my buyer, I don't deal directly with sellers like you do. I deal with them indirectly through my buyers. I have yet to find one come across a panicked seller that they were able to get the most smoking deal, but I do know they're out there. And they were talking to one in Florida, and I said, well, what was it? What was her motivation? Well, she was selling the home for her mother. Her mother's 90 years old and needed a much greater level of care. And the only asset they had was the equity in the home to pay for it. And they thought the price was here, and they're realizing it's lower than that. And they did the wrong thing. They priced too high. They haven't chased the market down. They've been lowering behind it. So they have a strong need. That house has to be sold. Mom doesn't ever get to move back into it unless she passes away early unexpectedly. They need the money to pay for her care. So we're not seeing distress in terms of people losing homes to foreclosure, but there's situations like that with an aging population. You have that. We have divorce. You have the situations and things that come up. But what we're seeing is until you get to a situation where the economy cracks, you have unemployment go way up among homeowners, and homeowners lose homes. It doesn't bring this supply of people that are panicked and will sell at any cost. But we are seeing some more motivated sellers in the market because they're generally not opportunity driven. They're need driven. How does that mesh up with the listings that you've taken in the last couple, 2-3 months?
I don't know, Josh, that anybody's panicking, like outright panic. Like when I think panic, I think like, like scary movie panic, like, you're scared to death. Something's going to happen. Like that's panic to me. But I will tell you the conversations are different. There are tougher conversations now. It is not just, hey, the market is slowing, days on the market are adding. It's people want to know why. Like, why is my home sitting? Why is that one selling? What am I doing wrong? And the answer sometimes can be nothing. You're not doing anything wrong. Like here in Huntington Beach, the average days on market's about 50 days. It's a little bit less, but say 50 days. So that means from the time a home hits the market to the time it goes under contract takes about 2 months, right? And so people think, my home didn't sell the first weekend with the open house. There was 30 groups that came through. Why? Like what do we do wrong? Maybe nothing. Right? It's buyers not only wanting to see your home, but maybe they want to see some others. Maybe there's one that's a coming soon and it's not going to be listed for a week. And they're like, you know what? I like this house, but I kind of like some of that one more. I'm just going to wait and see what happens. There's some of that out there in the market. They also know, most smart buyers know that, listen, if you need to sell, you're going to adjust price over time in most cases. And some people just want to see a little adjustment, and maybe a little bit less expensive property or the ability to negotiate. So it's not panic, but I will say the conversations are different. And I think the biggest thing for me is that realtors are also panicking to some degree. Like I had a conversation with an agent in my market about a week ago. Actually, maybe it was this week. And he's thinking of switching brokerages. And he reached out to me and he's like, hey, listen, I'm at this brokerage now. And here's the thing. My listings are on the market and they're sitting, and they're not really giving me any guidance on what I can do to help them sell. And I'm like, okay, well, let's back up. Let's talk about that, because it's not necessarily your brokerage that's going to give you the tools to do that. It's, where are you priced? How long have they been on the market? What's the average days on market? It's part of you knowing your market and how to have those conversations with your client to help them know that, hey, that maybe this is normal. Like you're not an outlier here. And I think that's where some of the discrepancy is you do have realtors on Twitter where their homes aren't selling and now they're panicking. You got some sellers that are kind of adding to that. Their homes aren't moving. So there's a lot of voices out there that are different than they were just a short time ago. And for people that aren't used to that, it's like, oh, the roof is falling in, we're all done. No, this could it be? Possibly. But what I will tell you based on experience and my feeling in the market is just, it's a shifting time. Part of it's seasonal, part of it's market. There's a lot of factors.
I've got another good example, and take all of this with a grain of salt, you guys. This is anecdotal and it is local to where we're transacting and doing business, but helped a listener and husband and wife in Florida buy, and it came together really quickly. We closed in like 17 days, but they found the house really quickly, and they went out, and we thought we had a deal put together. And the agent calls me the next day. He goes, "I don't think this thing's going to come together, but we don't care. There's another house. It's a model match in the same neighborhood, same price. And I've talked to that agent and they're willing to play ball. I'm going to call the listing agent and let them know, here's the situation. They prefer your house. This is what they would like to do. This is what they want. Would you like to sell, or do you want us to buy the other house?" And predictably, whether it was the agent or the seller, nope, we're sticking to our guns. Well, cool. The next 24 hours later, I have a contract on the other property. 17 days later, we're closed, and the other home is still sitting on the market. And that's just outside of Tampa. Tampa is not a terrible, weak market, but it's one of the markets that gets listed as a slowing market, and that's what it looks like. They had an idea of what homes were worth in that area, what they wanted in terms of concessions. One seller wouldn't give it to them. The other one did. So when we say a shifting market, that stuff didn't happen 2 years ago, and it's definitely happening today.
And if you're a seller, I'm going to give you some experience, some real world experience. Your first offer is usually your best offer. That's experience. That it's not 100%. That's not means you're batting 100%. But what I will tell you, based on experience, your first offer is usually one of the best. So when you turn that down, you have to change your expectations in many cases, because if not, you're going to end up having regret. So with that said, Josh, let's talk about the condo market, right? That's where we've seen some of the cracking, some of the, I guess, quote unquote, opportunities for people to be able to get some of the lowest prices. I would say deal, but deal's relative depending on what you're looking for. But South Florida, a lot of condos, was one of the markets that cracked in 2008 because it was overdeveloped. There was so many cranes building high rises at that time, and then the market changed and they were stuck with inventory. Different now, but not different now. You've got insurance issues, you got HOA issues, so to speak, because of insurance issues. So all of that's playing a part in some of these buildings, plus non-warrantable, like some of the Fannie Mae and Freddie Mac have said, hey, listen, we're not even going to finance on these buildings because of the financials. So all of those things add different layers of complexity in just different ways, and causing properties to sit and supply to add up.
Here's my take on it. This is not, it's isolated, and it doesn't impact the vast majority of buyers. Because what I will say is, where is it impacting? You mentioned high-rise condos in areas like Miami, other areas where they built a bunch of high-rise condos. Most people don't want to live in a high-rise condo. We're also talking about older condos. Florida has a large concentration of old condos that were built a long time ago, that have many common areas, that have deferred maintenance. So it creates a problem in terms of financeability. The insurance issue has created a problem for older buildings throughout the country, whether there's a concentration of them or not. We have an increasing amount of unwarrantable condos here in California, largely because of insurance. And it's not because of the fire issues. It's because if the insurance becomes so expensive that the HOA dues would have to go so high, many of the associations are choosing to underinsure. They're not going without insurance, but they're underinsuring. So we get the package, and Fannie Freddie guidelines say, oh, that doesn't fly. So there are solutions for them. But when I think of most of my people who are willing to transition to a condo or a townhome are looking at something newer, more recent, many times townhouse style, there's less issues with. Sometimes they can be considered a PUD or a single family, depending on how they were built with local zoning. So I don't have a lot of people who are interested in buying condos, true condos that we're talking about here that are impacted. I have a lot of people that are wanting a condo or a townhome, but they're just not being impacted by these issues. So it's not that it's not an issue. It's, again, this is local and regional. What is it looking like in your market? Because if you do run the numbers nationwide, you see greatly increasing amounts of inventory, much sharper downturns in prices. But again, it's very regional and depending on the market and depending on the warrantability of that condo. I am not seeing for us locally here in Southern California, properties that are insured properly, that have good finances, that aren't 60 years old with deferred maintenance. It's not really impacting those. So I just don't want people seeing this going, oh, this is canary in the coal mine. Something is coming behind it. These are unique issues to condos that are most likely not going to impact you as a buyer or your market in general.
Well, let's talk about the regional differences, because I think that will help just show like not all markets are the same, right? So at the moment you got Austin, Texas down 3% year over year. Los Angeles, where we are, up just less than 1%. year over year. So 0.6%. And when they say Los Angeles, they're lumping in a huge market. It's typically not just LA, it's LA Metro. But here in Orange County, prices are up year over year. I don't know what the actual percentage is, but I can tell you just from my neighborhood and other home selling, prices are up. Cleveland, this is a huge outlier, up 12% year over year. I think it's one of the fastest growing cities at the moment. Part of it's affordability, right? You can get homes for lesser, more bang for your buck when it comes to square footage and property size, and affordability is you get a lot more homes. So that's causing more people to go there. You get bidding, you get people, competing against one another, driving prices higher. So again, we talk about real estate being local. Find somebody in your market that understands the local data, somebody that's not just a yes man. Yes, home prices are going up. Yes, home prices are going. It's, hey, listen, let me tell you what's happening here, but also here, and be able to provide some context and maybe some stories that help guide you through that process. And quite frankly, if Josh and I could be of any assistance to you, locally or nationally, you can use that link in the description of the video, which is theeducatedhomebuyer.com/start. You can go through the pre-approval process with Josh. I can help you refer. I can help refer you to a lender in your market to help guide you as well. But Josh, let's talk about some of the deals out there, some of the opportunities with regards to builders, incentives, and what you've seen, because you work with a lot of people that are buying new construction.
So the funny part is we go back in time, pre-COVID. I loved it when people went and bought new construction because they would say, hey, you have to get pre-approved with the builder's lender. The builder lender sucked. Half the time they tell them they couldn't get approved when they could. And then when they could get approved, they would give them awful terms. So they're like, we're going to use our outside lender. And it was fine. Now the builders, big national builders, have wholly owned subsidiaries that are mortgage companies. So they can eat a loss over on the mortgage side. And they have the margin, which we're seeing margin compression in the home building business. They were at 30%. Most of them are down under 20%. And that's largely because 5 to 7% of their margin is going towards incentives. Giving you money to pay down closing costs, to buy down interest rate temporarily or permanently, your choice. And why do they do this? Because they don't want to come off their price. They would rather give you $30, $40, $50,000 of financing incentives than drop the price $30, $40, $50,000 and irritate the heck out of the people who bought 2-3 months ago at a higher price. So who knows what the impact is long haul? In the short run, a lot of people who would rather have an existing home go, interest rate 6.875 for an existing home, but I can go get a 5.875 if I go and buy the new home, and they'll cover all my closing costs. And there is a lot of smoke and mirrors here. They'll tell you, hey, I told the story on the show before. I have a friend who bought new construction here in California. He says $30,000 incentive. We're going to buy your rate down to this. And we look at it, it was an $18,000 incentive. Okay, so there was some puffery. They lied to you. They were only giving you $18,000 of free money. But for a lot of people, that makes the difference between being able to afford and not afford, or be comfortable with the payment and push it down the line. So we lose a lot of qualified buyers that choose to go that way and look at numbers that we can't compete with. So it's just something you have to pencil out. It can definitely make sense, and it can go a long ways towards making numbers work that wouldn't otherwise work for you. But no, there's a reason why the builders are doing it. And at a certain point, they have already slowed down the new construction over the last year. So there will be less homes coming to market. There should be less pressure for them to offer these incentives to keep moving. But they are in business. They have to sell homes. They can't just stop selling homes because we have too large of a supply. So it's an interesting thing to watch play out. But I would go back and say, this is an area people always ask us, do I need a realtor if I'm buying new construction, or can I just roll into the sales office? You need someone who can analyze the market, show you what's happening around this new construction, what's happening with the new construction, on top of guiding you through that process, just to make sure that the big incentives are not leading you down the primrose path, and you're actually getting something good for your financial future.
Yeah. So, I mean, I think at the end of the day, the thing to recognize here is the market's not crashing, but it has shifted. If you're a buyer out there, there's opportunities. The FOMO should be gone in many ways, but still going into that process, you need to focus on a couple of things. You still need to be pre-approved before you get out there shopping, before you fall in love with a property. Don't wait to find the home and then try to go through the pre-approval process. Because I will tell you, most times, if it's a house that you love, Other people probably love it too. There's an opportunity there for you to miss it. You could, now's the time to be a little bit more aggressive with credits, with negotiation, giving yourself an opportunity to get some things that you weren't able to get, a couple months, couple years ago. Focus on condition, focus on comps, focus on concessions. These are things that at the end of the day can make the deal a little bit sweeter, right? Those credits and concessions can help offset that 7% interest rate. Maybe in some cases they can help offset the price and get you, the home for a lesser amount of money at a lower interest rate and ultimately help you with the payment. Now, Josh, if you're a seller, what does that look like?
Well, but before we go on to the sellers, the thing that I would like to, the most aggressive form of negotiation is being willing to walk away. That was very hard when there was such limited supply that you're like, I honestly don't know if I will ever find another home that meets my needs at a price that I can deal with. We're not in that market. Just like those folks in Florida, make sure that if the numbers don't make sense, move along. We're not in a market in most parts of the country. There are a few little pockets. If you're in Cleveland, maybe that's different. But in most parts of the country, you don't have that. But from the seller's perspective, just remember that this is the most important thing that any seller can ever hear. You only get one chance to be new on the market. And if you come new on the market and the response in the market and among your neighbors and people looking to buy homes is a chuckle that those crazy people think their home is worth that in that condition. And they're going, well, yeah, Joe and Susie sold around the corner for that, but their home was perfect. And this one hasn't been touched in the last 30 years and they want the same or more. That the longer a home sits on the market, the harder it is to sell and the more likely you are to price. You had already mentioned one of the greatest pieces of advice is that oftentimes that first offer is the best. You turn your nose up at it and you'll wish you had it in the future. The thing that I can say, coming from a mortgage and finance background, try to compete with the builders. Do what they're doing. You have a margin. We talked about how much homes have appreciated, 47% in the last 5 years. If you benefited from 47% appreciation, you might be able to hold on to your price or sell your home faster if you say, hey, I'll give you a $10,000 concession. I'll give you 10,000 and 2 points to buy down your interest rate permanently, temporarily, whatever you want to do. You want a 2-1 buy down? Great. Here's 2 points. You want to buy it down 0.5%? Great. Here's 2 points. Increase your affordability versus other sellers who maybe haven't thought of this way, who their realtor hasn't advised them to do that. But sitting on the market, right or wrong, becomes a red flag. We get questions from people on the show all the time. Hey, this home down the street is on the market for 14 days. How much should I discount my offer? Like, well, 14 days is kind of normal, but sometimes it's 72 days. And now you're going, what's wrong with that house? Do I really want it? If I want it, how much do I want to cut the price? Because nobody else clearly wants it.
Yeah, and if you're finding any value today, make sure you hit the thumbs up. If you want to stay updated on everything mortgage and real estate related to become an educated home buyer, make sure you subscribe to the channel. And last but not least, guys, make sure you buy right, you borrow smart, and you build wealth. Until next time, adios.
Amigos.